Hi all, this is Ashish Kyal here. Welcome again to Elliott Wave News channel by wavestrategy.com. And in today's session, I'm going to discuss about where is Nifty headed. But before I proceed to that, I would like to point out that we have been bearish in the month of June, which has paid out pretty well because we have been bearish all the June. And Nifty started correcting from 5th of June and it has continued till the almost end of June, and we turned bullish, extremely bullish in first week of July. So many of you who are probably not subscribed or might not be reading the research report might have been thinking that I have been bearish all the way. But you have to understand, this is more from the swing trading, and the webinars that I have been doing is more from the educational purpose. I would still suggest do not take any actions based on just looking at the webinars or based on the articles that we publish on the website, because that is from the educational perspective. If you would like to understand the in-depth levels and the views, I would suggest you please refer the daily research reports which are published in the morning. I'll now explain about why we have been bearish all the way in June and what turned for us to be bullish in July, and even now we have been bullish all the while, which has helped our readers or subscribers to capture the move amazingly well from the very lower levels, and even they are currently still riding the trend. So the reason of being bearish, let me share across a very simple technique of time cycles that we use in order to understand whether there will be a selling pressure on the market or it is going to show some buying pressure. So time cycle is a very important and very basic concept that we rely upon, apart from using Elliott wave and Neo wave, which helps us to take a stand in terms of timing the market. And we use Neo wave in terms of getting a price confirmation whether the trend is probably reversing. So when Nifty started correcting from the levels of 9710, it corrected all the way towards 9450 levels. And if you look at it, this was decent enough correction, and not in just of price. In June, it corrected for almost 3 weeks. So that was a sufficient enough time correction, and it has paid out well to be bearish during that zone, because Nifty has continued to correct, whether it is time wise or price wise. Both has happened in June. And post making a low at 9450, we saw a very sharp reversal on the upside. And as soon as Nifty started taking out the levels of 9550 and 9600, we turned bullish, because that was the time when prices actually was very close to the time cycles. It started rallying just few days prior to the cycle and sideways. And as soon as the time cycle low was in place, the momentum started picking up drastically. So when 9550, 9600 was taken out on the upside, we turned extremely bullish, and we said we might be headed towards the next projection cycle of 9851, and it has paid out amazingly well, because Nifty rallied almost in just 7 to 8 days. It rallied by more than 250 points, and that was sufficient enough for any swing trader to capture. So anyone who is probably trading options or capturing the swing, these kind of moves are very important, and you have to analyze those short-term moves. So for example, Nifty might move towards from this level further higher, and if that happens, but does the risk reward is favorable or not? So this kind of important information you will get once you are subscribed to the daily research report. What levels you have to turn bullish, what levels you have to turn bearish, and those kind of informations will be there. So for someone who might be thinking that I have been bearish and suddenly I'm bullish, it is not so. It was expected only till the end of June or first week of July, because there was a time cycle top which was ongoing. Time cycle low was forming in the first week of July, and as soon as cycle low was in, the prices started turning up again, and we can clearly see how sharply and fastly it has moved on the higher side. So let me share across those charts which highlights about how the time cycle has behaved and how the wave counts have been. So if you look at, let me start with first thing with the monthly research report, which we published on the 5th of July. So if you look at this report, which was published on the 5th of July, it's Financial Waves Monthly Update. In this research report itself, we mentioned that Nifty has taken support very close to the GAN support level of 9458. So it went to only 9448 and reversed from there. Also, we mentioned that there is time cycle in a very close vicinity. So probably an important low is now in place for the market. And the next target level, if you look at the chart, the next target level of 9851 was clearly mentioned in 5th of July, when which was the GAN projection level. So this GAN projection level worked out extremely well, and Nifty has probably now flirting around 900 odd level, so which is just around this specific level. So does it mean that you have to turn bearish now? Absolutely not, because the GAN projection level gives us a tentative range where the price can head. So once that level is broken out decisively, maybe by 150 points, then we can say it is headed towards the next higher level. So unless until this level is now there is a possibility we might start seeing some consolidation, but there is no negative confirmation. So the long positions initiated by our clients at the levels of around 9600 odd levels, they should continue to ride the trend. It's almost 250 to 300 points in the money now, and this is the best way to ride the trend, is to squeeze out most out of it. Let me now, this is from the medium term perspective, which was published in the monthly research report. Let me now share across the daily research, and a very important aspect of that research is going to show you the expanding pattern which is ongoing. Let me now also touch upon what is this 55-day cycle. So if you look at this cycle helps us to understand when can be a selling pressure building up on the index. So over here we can see that there was some selling pressure or a sideways action. Similarly, this was the point when Nifty touched 9710 in first week of June, and all the June it continued to drag lower. And this happened because the cycle was in sell mode, and you can clearly see that the cycle worked out pretty well. You shouldn't be timing this cycle to the last day. Please understand that any expert trader understands it, that the cycles are dynamic. You need to give leeway even at the point. So you cannot just pinpoint 9851 does not mean it should be 9851. Price can fell short of it, or it can overshoot it as well. So one should not use these levels as the exact level. It is always a range. Always remember, whether you are doing price forecasting or time forecasting, it has to be range. Similarly, time cycles worked out extremely well. It was just few days prior it formed a low, it went up drastically, then started moving sideways, and we are currently at this zone. So this is the report as per 5th July. That is why you're not seeing the current price action. So we are currently at this zone of 9,900 odd levels. Okay, and this is how the time cycle should be used. So we have been bearish during June, given that the time cycle was stopping. We turned bullish in July because the time cycle low is in place and the cycle has turned on the positive side. So this is how time cycles helps us to turn bullish or bearish from in instantly. So you have to be fast enough in order to act from one bias to the next, because markets are moving extremely fast. If you are slow, you are stuck with a position, you probably keep on seeing losses on the other side if you are not fast enough to act. So use of stop loss is extremely important. Understanding the key reasons for being bearish or bullish is very, very important, and also having an important level where you should be booking partial profits is very crucial, so that you are taking off something off the table once you are well in the money. Now let me show across and share across another screen which is going to show you the expanding pattern that we are seeing right now on the Nifty. So let me just share that across. So if you can see this screen which shows the expanding pattern of Nifty. So over here you can see that Nifty has been moving on the upside in the form of an expansion and is contained within this blue channel. So this is not a parallel channel, this is an expanding channel. It is one of a very, very basic and the important method to look at prices. So as per this channel, the upside target comes somewhere around in the zone of 9950 to 10,000 psychological mark. So is Nifty going to touch that 10,000 psychological mark? It's very, very difficult to say as of now, because prices are approaching close to the upper end of the channel, and we know from the years of experience that one shouldn't be relying extremely on the final breath of the market. But at the same time, looking at the momentum so far, we haven't seen any kind of negative divergence. There is deterioration in the advanced decline line, so that remains a little concern. But this is expected, because when we are in final wave Z, the advanced decline ratio can continue to deteriorate. the stocks that will participate in the rally can continue to reduce. However, from the index perspective, there was a gap up opening in previous session there, which was sustained, which is sustained even today. So there is no reason for anyone to turn bearish now. At the same time, if you want to go long at the current scenario, you try to understand there are times when you need to hold on to your long positions, but there are times if you have to initiate a fresh position, you can't do that. So if you want to go long right now, this is not the prudent area because the risk reward is not favorable. However, for the longs that are initiated as per our research reports at 9600, 9650 odd levels, they are well in the money right now. It's best to have some partial profit booking since prices are approaching towards the upper end of the channel. At the same time, you should be trailing for the remaining position. Use a trailing stop method for the remaining position because that will ensure that you are capitalizing the most out of the current ongoing euphoria. So you can't just exit all your positions. You need to book partial profits at the same time. Keep trailing the existing long positions to make the most out of it. It's not easy to do that because you are seeing a huge profits right now, which might not, which might force you to exit. But if tomorrow Nifty continues to rally from here another 100 points, we shouldn't want you to move out early in the trend. From here, looking at the channel, there is still some room on the upside. Nifty can touch 9950 or 10,000 psychological mark. But beyond that, I have my doubts it's going to sustain because that is a very strong psychological level. And apart from that, it is also the important channel resistance on the upside. So a very important trendline resistance is placed on the upside at that zone. So that's why it is important. Also, GAN projection level is at 9851, which means we need to give 100 to 150 points of leeway on the upside, which it can go. And that is why 9950 to 10,000 looks like an ideal level that one can aim for right now. At the same time, use a trailing stop method below this channel support, as unless until we see prices moving below this channel support, it is prudent to be holding on to the existing long positions. So this is a very important aspect that one should look at. Let me also share across an hourly chart right now in today's session. Let me show across an hourly chart and how it looks like to probably use those 60-minute charts from trading perspective. So this is an daily chart, and if I go on to an hourly chart, you can very well see. Let me remove this. If I go on an hourly chart, you can very well see there is no reason for anyone to be bearish right now, and there is no reason to exit the long positions also, because if you connect the lows, you get one very important channel, and you connect a parallel line to these lows on the upside. You can clearly see prices are moving extremely well within this channel. So as long as this channel is intact and it's drifting higher, so as long as this channel is intact, one can continue to hold on to the long positions. Also, the gap area seen in the previous day is going to be a very important support zone. So one can hold on to the long positions as per this chart. Time cycles are in the buy zone, and that's why we have been bullish all the while. And you can find a very detailed analysis with the Elliott wave counts and what can we expect near from here on after 9950 is reached. If it is reached, then what is next and which pattern is forming. All those details will be mentioned within the daily research report which is published. There is one more important announcement. We have actually launched our 1 hour of crash course on the website where you can probably visit wavestrategy.com. You will be able to see there is a free member login section. So if you go to the free member login section, you will be asked to register there in case you are not already registered. So once you register here, you will be able to sign in. So if you are already registered, you can sign in directly. If not, then you have to sign up. Once you sign up, you will be creating an account, and after the account is created, you are able to log in under the free member section, and from there you will get access to, in WS exclusive, you will get access to 1 hour of free crash course video on Elliott wave. So we have come out with that crash course video absolutely free for a limited period, so that people can see the power of Elliott wave and how it can be applied. But trust me, that's only a 1 hour of crash course video. and it's not sufficient enough for someone who is not who is not already practicing Elliott. So that is just to give a brief idea about what that study is all about. And apart from that, I would suggest that in case you are interested and if that impresses you, you can enroll for the upcoming training on 29th and 30th of July here in Mumbai at Grand Sarovar Hotel, where I'll be discussing these methods that you have been seeing. I have been applying in June, I will applying in July. What made me turn from bearish to bullish, and what will make me turn from bullish to bearish again. So those kind of levels and those kind of discussions will be happening in the 2 days training seminar, which is going to be there on 29th, 30th, where I'll be talking about neo wave, time cycles, and Gantt projection levels. Now, the entire course is going to be focusing more on the neo wave, and time cycles and Gantt projection levels are going to be used as an ancillary to confirm if our outlook is correct or not. When these kind of advanced techniques are combined together, the conviction increases drastically, and trust me, when that happens, it doesn't take time for you to switch from one mode to the other mode. For a few traders who do not use any techniques, it might be difficult from turning from bearish to bullish, from bullish to bearish. But in this kind of a market, you need to be fast in acting, and when the time cycles turn, you need to turn accordingly. Even it might take just an hour to turn your views from bearish to bullish, and that is how time cycles have helped us in June to be on the short side. It has helped us brilliantly so far in July on the long side, and I hope you will be able to apply yourself this kind of techniques together and able to ride the trend which is currently ongoing. That's it from my side right now, and thank you very much. See you again next week, same time. And this video is also going to be available on the website at 5 p.m. You can visit wavestrategy.com. And in case you would like to register for the upcoming training session, you can write to us at helpdesk@wavestrategy.com or contact us on 99204 22202. Thank you very much, and have a wonderful weekend ahead. See you again.